The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
One Basil Chapman, Tiger Technicians Hour, Monday, Wednesday, Friday at 11 o'clock till noon Eastern Time. My pleasure to be here, and certainly great to hear the duo back, Tom O'Brien, Steve Rhodes. We missed you last week, and I believe that the tour was just a roaring success. And that, of course, it's understandable, but it's also gratifying to know that you put in that kind of work and you receive that kind of accolation. Congratulations. And, of course, we're looking forward to the one in Boston. In fact, I'm trying to organize my schedule so that I can at least slip over and say hi. I've never met Steve eye to eye. We've spoken over the phone. We've spoken on the show, but never met him. So it'll be, if it works out, it'll be great. Now, and, of course, go to the front page of TFNN, because on Wednesday night, I have my free. Now, I've never done a free webinar before, but I've just had so many requests with questions about the ChapmanWave. What do you look at? Why does it sound like it's such a simple thing, and yet in words it just sounds so complicated? I mean, I know that if I was on the other side listening, I could just see my eyes just glazing over. All those words. Look at this. Let me show you something here. If you're looking at Tiger TV, look at the 1 minute chart. It doesn't matter if it's a 1 minute or a 20 or monthly. Look, from the low bar on the E-minis at 9:46 this morning, at 13:53, it went up with 4 peaks. It then had another, I call it, this is not an instant restart, but it had another buy mode, which went where? To peak D again. Did it care? I've still got those trend lines in. Did it care that the trend lines are there? It's got nothing to do with it. The waveform is the waveform, the structure of the structure. Then what happens, you get this extended spike up. That's where we use technicals. In the workshop that this live webinar that I'm doing on Wednesday night, 6:30 p.m. Eastern Time, I want to do it for... I'd like to do it for 90 minutes. I don't know if I'll get there, but I'm stretching it out. I'd like to, if my wonderful engineers and all are up to it. Because with all these questions, I want people to know how to notate the ChapmanWave. It's really important. I want them to know when it fails, what to look for. I want those easy questions out the way so that we can get into the nitty-gritties when I'm discussing it of what happens when you get to a leg F with a doji top like we have in the Dow. Look at the way it's extending here. Look, now, I will not get into the moving averages. That's a webinar. It's a special thing. I do it in my Master Trader series. Have a look at this white line here. Look how the E-mini in the 3-minute chart, if you were long from earlier this morning, you could just hold long. You don't have to do anything until you break under it. Then you can make other decisions. But the waveform is unfolding just like it's supposed to. So that's what I wanted to show just right here. Look at the 120-minute chart. It did not break above the 1369.50 E-mini high on the 19th of February. It went down to a trough F. I put an up arrow because everything there said that it should go to at least retest that high. It went to a peak A, a B, then it pulled back. But what did it do? Within that, there were trend lines that I had drawn for my subscribers, my opening call subscribers. Get this chart every day, and I give the parameters. I don't do the study because that's in all the other charts that I send. What, 8 charts, 9 pages of charts. It's not even just charts. Of text and charts. But you don't even have to look at that. Why? Because, first of all, this E-mini chart is breaking out. If it does, I'm not saying it will. I'm saying if it does break above 1368.50, that'll be really, really good action. And I'll explain why in a moment. But when we go to the Dow, let me give the numbers first of all. The Dow is... oh, my goodness, it's down 5 after being down 98, I think it was, in the Dow. It's at 1288, I think was the low. In fact, this is what I do for my subscribers every day. Look at this. I showed this quintile, I think that's what we'll call it. These 5 charts, 120-minute chart showed exactly that the 12,880 level will be key support, and it's got to get back into the up channel. Red line is when it closes below. Green line says that's the inside track buy mode. I probably will show a little bit of this on Wednesday if I get time, but there are so many other things that we need to talk about. And this inside track says that if you hold, every other time it's been a propellant and you've gone right back into the middle of above the green line. It also says that the up channel resistance didn't even get close when it went to 13,013 in this 120-minute chart on the 24th of February. So that says that we are starting to work harder and harder and harder to make new highs. There are new highs, recovery highs, I should say, but it's making a lot of effort to do that. But wait a minute. What about the volatility index? Look at this 120-minute chart. The 120-minute chart went to 16.42, just above the 16.10. Most recent, do we call it a recovery low? Unrecovery low. The unrecovery low at 1610 on the 3rd of February in the 120-minute chart pops to a peak G 21.98, and it comes back down in a left side right side price time match to 16.42 trough C. It tries to rally, goes. This is really important. It went to 19. It closes on Friday at 1731. Today, it pops to 1925. That's 2 points. That's 10, 11. It's about 11.5%, 12%. And then what happens? It starts to give it back up. I'll show that in the weekly chart in a short while. The short-term trading index, my index gauge has given very little in the way of negative readings lately. It has been saying it pops very quickly to the 1.992 area, but it's been the most benign that I've seen this index for years. For a really long time, I shouldn't say years, but for over a year, at least over a year. It's probably a year and a half. And now look what's happened in the major up channel, which I was talking about Friday. You remember? I said there's a major uptrend line in the daily charts if you want to draw it a little bit loosely, but you can see that that's an up channel. And in the going all the way back to November, was that November or December? December 21st, and the same thing for the S&P. S&P just touched the line and bounced today. The Dow broke under. I'm going to give it a little room. The Dow broke underneath it. In fact, you know what I'm going to do? I'm very flexible when it comes to channels. You have to follow the channel correctly. When I say correctly, you can't be stubborn and put in the channel and say, "Hey, price, stay in that channel. Hey, stay in the." You've got to draw the channel to the most important. Look, I want the most important lower lows, and that's going to give me the trend line. That says that if the Dow closes under 12,800, you've got to be careful. Dow's up $1.51 at 12,987. The S&P is at 1365.89, up 15 cents. The comp index is up $1.64 at 29.65. The gold is up $2.50 at 17.78. Silver's up 24 cents at 35.58. High grade, great. High grade copper is at 3.88, up at 1.75. You've got crude oil down $1.21 at 108.57. That's what I said to subscribers today. If oil was up about $2, if it's up sharply higher, we are vulnerable. And now I'm going to explain why we would be vulnerable. Because if you go to the Dow chart, it made a leg F/B on Friday at 13,013. It also stopped within the up track. This is a different technique that I'm using. I'm using the rising wedge with the ChapmanWave inside track. And it's saying, I'm going to have to move it because you need to be able to see it. It's saying, and I kept mentioning on Friday over and over, the MACD's pulling back, but the stochastic is holding at 87%. Now it's at 88%. The on-balance volume was about to make a little double top. I'm watching on-balance volume real closely. That's the green line there, but I don't have a signal yet. Now what's really important about this is that the weekly chart, if we are able today, preferably today, it can be tomorrow, but today, to break 1 penny above 13,013.82, we go to 0.83. That's how the ChapmanWave works. We have extended leg B into this week, and you cannot get a peak B until Friday a week. Even if we hit it today and then turn down and we go straight down for two weeks down into next Friday, that's the only time on a weekly chart that I can say we have made peak B. At this point, it is leg B, potential peak B, if we do not all week go above 13,013.82. And the monthly chart, as I say, is moving very nicely, but month's not finished. We've got a couple of days to go. Now, let's get to all the different index. Oh, I didn't finish bonds. Bonds are, right at this particular point, bonds are up 25 cents to TLT. Now, this is very interesting. Remember, it was months ago actually, that I said when it went to the TLT went to peak E, the 20-year Lehman T-bond fund went to 125.03 and then plunged down to 109, was it? 109.82 on the week of the 28th. I said, be careful. This can stay in a trading range. I don't know how much money has been lost in rectangle formations when people try to buy the breakout at the top, or even worse, to short the breakdown. And, there's a call for low interest rates. These guys keep calling. I don't know how to get rid of them. Anyway, okay. Low interest rates. Let's say it's low interest rates. 1-305-587-2091. And I do not want them on my list at all. So we'll just do that. There you go. So this is very interesting. How did they know I was talking about bonds? Isn't that amazing? Even the what do they call those things? Those calls, those keep coming in that you don't want. Even they are listening to TFNN. Well, the yields, this is really interesting. If you go to the yield, the TNX, I'll try to get to the chart. I don't want to get the chart right now. The TNX is in a trading range, and all it's doing is going, that's the 30-year T-bond yield. It's only going between just under 2.1%. And 1.8%, and it's been doing that for a long time. That is one of the reasons that's a telemarketer's good. Even the telemarketers are listening to TFN. I mentioned bonds, and I get a call right there for interest rates, low interest rates. So this is what we're looking at. Let's just do this step by step. Oh, I do want to go through some of the indexes right here. 877-927-6648 is the number to call, but let's go through this first. The IWM. That's the Russell 2000, which was kind of the weaker of the indices. It didn't break down, but it was just not going the way the others. Has made this oval pattern. It's a pattern that I call the ChapmanWave stalk leg formation. I will not be able to get to that on Monday. I don't think so. These patterns are all going to have to wait. That's the leg, a long leg up. Then it makes an oval pattern, and that's called the body. If it is, all it has to do is break 1 penny above the most recent high of 83.31. It's at 82.73 right now. 83.32 starts this next leg up, and that becomes the neck. Then we expect the head to form, and then it comes all the way back to the oval. And that, the way I'm looking at things, we are going to get at least a 2-week, maybe a 3-week consolidation. I'm getting close to those signals. If we drop sharply today, maybe I will start getting that signal. Hey, I'll be back. 877-927-6648. Be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. The Dow is up 23, the S&P is up 2.77, the comp index is up somewhere. The comp index is up 8 to 29.72, and interesting, bonds are now up 23.30 seconds. Oh, I didn't finish one thing. I kept meaning to do that. EUR-USD. Folks, I want to get calls today. EUR-USD. I want to be able to explain the ChapmanWave as it's working right now. The euro has made a peak D. The target I have is the 1.3490 to the 1.3520 because the 1.351 is the 200-period exponential moving average. So it's made a peak C. I suspect it's going to try for that. That partly is... that would say that the weekly chart is doing very nicely. Now, the USD, JPY, that is the dollar, Japanese yen currency, is in leg D right now. It's probably going to make a peak D. The 120-minute chart, what did the 120-minute chart do? Made a peak E in the ChapmanWave. And that says, yeah, it could pull back. Very important. If it doesn't hold 79.85, it goes lower than that. But if it starts to stabilize right here and by this afternoon or tomorrow is able to get to the 80.72 area, that'll be good. But it's just a spectacular move. Oh, ChapmanWave, what do you expect? Trough, E, Doji, low. I will talk about that in the webinar. I'm going to talk about dojis and how important they can be. That's why I like them. I prefer them to bar charts. It's just easier to see. I know some people can look at the bar chart and say, hey, Doji, you're doing a lot of work. It's just easy for something to pop out at you. But the stochastic is at 92%. This is really strong. And the 9-period moving average is down at 79.80. It's at 80.54. It's down 64 cents. But here's the other thing. The fast moving average is still really strong. So I don't see this doing anything more than a pullback and then reattempting to test the recent high. It's leg B in the weekly. And look at this on the very long-term chart. Made a peak D. How many times can you see this, huh? Look, a peak D. Anybody who did my last my most recent Master Trader series or the all-day ChapmanWave study knows exactly what I'm talking about when I talk about the low of the 30th. November of 1999, followed by a doji candle, just one bar off the low, and then you go peak A, B, C, D, stop. You cannot get to the 200-period moving average in the monthly chart at 135, pulls back, trough E, starts another one, A, B, C, then it goes to D and a slightly higher E, cannot get to the 200-period exponential moving average, major downtrend takes place to a trough G at 75.566, and now look, it's starting its first A. It's got so much work to do to really, to do something spectacular, but it's a nice start anyway, that it's trying to rebound. Now the dollar, DXY, I want calls, 877-927-6648. Look at this. The dollar went to a lower low. And you remember I'd been talking about left side, right side price time match that had extended out a little bit more than further than I initially had anticipated. I anticipated earlier on around where that circle is. So it missed it by 2 weeks, and it was higher up, and that's good. But now it's extended out to a lower level of 77.90s. So that says that if the dollar was to break, and I've spoken about the 78.09 area, it's very strong 200-period exponential moving average support. So this is why I think that we are getting really close to some kind of a pullback of time. I'm not sure yet whether it's going to be points. I'll first say that it's time. So we haven't got the yet, and that would say that the dollar might have a bounce or two, but it probably, I'm watching it closely, because if the dollar breaks under 77.80, closes under 77.80, I suspect we can hang around at the highs here in the market for just a little while. I'm really close to some kind of a sell-off. I'm not sure yet, because I've given my opening call subscribers exactly the levels that we're going to be watching. But at this particular point, let's just say that if the euro is in leg C, maybe peak C, and still has to go to D, then the dollar might have to go a little bit lower. Let's see what happens here. If we go to the UUP, the UUP did drop closer, and it is underneath the 200-period exponential moving average. So I'm going to be watching this real closely. Now, I want you to do, there's one other thing I needed to, New York Stock Exchange. I mentioned it, and then I forgot to go to it. The New York Stock Exchange. Now, this is, you can pat yourself in back. You can do anything. I got an expression when you pat yourself on the back. When you take your hands off the wheel to pat yourself on the back, that's when you hit the tree. So there's nothing here for bulls to say, oh, this is fantastic action. Look, this is the New York. Is that the music already? Yeah, it is the music. All right. After this, I'm going to take calls at 877-927-6648. Anyone in the den want to pop in a stock or two to look at, that's great. But what I wanted to say is that the doji high of Friday on the New York Stock Exchange at 8176.29, it needs to be taken out, and soon. Otherwise, it's going to hint that we're going to have a consolidation coming up fairly soon. I'll be back. Basil Chapman.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this traders market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Now let's look at crude oil. 877-927-6648 is the number to call. Crude oil, the USO has made a peak C, and that's what I was talking about the other day. I was speaking about this particular pattern called the ChapmanWave cup and ladle. It is a powerful pattern. When you break out from the cup without stopping to hang around for that one that I hate, the cup and handle, it does work occasionally, but it's not as successful. This one powers through the previous high, which it did from the high of the 4th of January, 39.96, pulls back to the doji low of the 2nd of February at 36.67, and then powers up in an A, B, right through the previous D and goes to C. Now it's making a peak C probably. MACD and stochastic are really strong. Unbalanced volume says be careful, you're pulling back a little bit, and then there should be a D above 42.07. After that, we've got to be real careful to see what goes on. But in the meantime, it's just short-term, still positive, and the 120-minute chart made from the low went from 36.67 to a peak F, top just above the 200-period moving average at 38.48, pulls back just briefly to 37.51, goes to a peak D. This is an instant restart. I will talk about this because it's an important part of my technique. on Wednesday night, how to look at these things. ChapmanWave Instant Start. It's going to be what happens after you get to a peak D. But the core of the free webinar is going to be the buy signal going to a buy mode to at least a peak D in not just hundreds, but thousands of charts since the December low. Now, you get an instant restart, and what do? You go to a peak E again, and now you've pulled back in the USO, which says, be careful, because if it breaks under 41.53, you could retest 41.27, have a little bit of a hiatus here. That's giving the market some upside activity. Now, I was asked in the den if I would go to DN, which is Dendrion Core, Biotech, Cancer Therapies. This is a very interesting stock. It just has this incredible spikes. Biotechs very often do. I used to do this. I had this notated beautifully because it was a stock that I believe we once had in my opening call. A, B, C, D, E, F. There it is. Peak F. Pulls back. Okay, the monthly chart says that it made this extraordinary move to a peak C, and it became a peak C minus when it plunged back under the 200-period moving average. So it's got it's a stock that can very easily jump. I mean, many times it's had moves from $3.57 to $18 back in March of 07. Then another one just started recently in March of 09. Hey, March. You see, I spoke about this once before, that you can find a rhythm in some of these companies because that's when they get the announcements. That's how they rotate through the different sectors, the funding of the sectors, etc. And statements come out and certain innovations are advertised. Sometimes it's not the real thing. It's just the mention of an innovation that they're working on, especially in biotech. So this goes from $2.55 March of 2009, where it goes to $57.67 in leg C to April of 2010. And then whoosh, something happened. The FDA didn't approve something. I remember that well. It was, in fact, a day after or so, one of my webinars when we did it back in Wellesley, a 2-day webinar, a Master Trader series, and we were talking about this very thing. So it drops to $25.78 in July of 2010, tries to rally again, fails at a peak B, and then as a plunge, this always plunges, down to $9.22 in August of last year, slips down to the November low of 646, and has a bounce where? Right to the 9-period moving average and the 200-period moving average. So now where are we? In the weekly chart, we've gone to a peak D and we're pulling back. But the daily is really interesting. Look, I forgot all about this. The daily has gone from the low bar of $7.05 on the 14th of December to a peak F underneath the 9-period moving average. And a peak F, you've got to be careful if the tacticals are failing. Look how the MACD deflected lower. Look at the stochastic was way lower than it was at peak E. Plop. This is what I call an inverted staple. It's like a head. Oh, where's Rick from British Columbia? This is, in fact, a beautiful head and shoulders. It's like a staple. Look, you've got your one side, then you've got the staple, the top of the staple, then you've got the little curve around the side. Oh, it looks just like this, only on its side. There, look at that. If I could tilt that to, I could tilt it to the side, but not here. Let me just make this nice and big so you know exactly what I'm talking about. 48, there we go. That's a staple. You move it to the side, and that's exactly the pattern. Very visual. So that's Dendrion. Where's it going? It should try to find some support based on the 120-minute chart. Somewhere between the low of today's at 1176. I suspect from looking at the candles that it's this candle here. 1106 is really going to be key. If it closes under $11.06 in the next 2-3 days, then that huge gap, the gap from the 4th of January at 768 to 893, that will become a target. I know it sounds crazy. It's a stock that was trading at 18, 17 something just the other day. But that's what these biotechs tend to do. Oh, talking about gaps, I mentioned on Friday that there were so many stocks with gaps to the upside from late January into February that if I was to pick a place for some kind of retracement and major support, until some of those stocks get close to the gap, we won't know. But if it's going to be a more serious decline coming up in the next 2 weeks, a week or two, That's the area I would see. And we might find that speed is of the essence. It is not time. It is speed to the downside. Zhup, you go down. Everybody gets bearish, just terribly bearish, and then we start rallying again. And I say that because my weekly charts are still very, very positive. Now, that was one. And the other question was, if I can go, munis. Is that M-U-N? I think it's M-U-N. Oh, M-U-X, M-U. I know it's M-U something. Munis. There you go. McEwen Mining. Oh, McEwen Mining. I've never done that before. M-U-B, of course. M-U-B. I was going to go through the alphabet there. M-U-B. Oh, I had these. Yes, I had these notated there. The iShares of the S&P National Municipal Limited went to a peak D. How many times am I going to say this? Isn't that nice? Look, at the monthly chart, made a spike down low to 85.10 in October of 08. It ran to a peak C at 107.80 September of 09, and then it made a huge kind of cup formation, started a brand new A, B, and if you know, oh, don't do that. Wait a minute. 198. No, this is even more interesting. That's not D. Folks, that's what I'm also going to be teaching in the webinar, that you have to make sure that you check that's your only obligation in the ChapmanWave, is to make sure that you identify this is the waveform that never sleeps. So you need to be very diligent and make sure that you notate carefully every single peak or trough. Otherwise, you're going to make a mistake. Like I almost did, thinking it was peak D. This is very positive, because in the ChapmanWave, there's a methodology. It's called the overlapping wave. Chapter 16 in my CD introducing ChapmanWave methodology starts from slide 317. So when you get a peak ABC and then it fails, but it doesn't go anywhere near the previous low bar, within that you can get getting a little lesson here. You can get another ChapmanWave. And especially if there are lower peaks that match the leg that will the leg that will unfold when you go past that previous high. Let me explain. That was peak A from the low bar of October of 08. Peak A was on the monthly January the 9th at 102.94. Peak B at 104 round number, May of 09, pulls back, holds the 9-period moving average, pops to 107.80 in September of 09. This is the iShares S&P National Municipal Limited. They must be some kind of a bond fund. It pulls back to a doji candle at 95.85 in January of 2011, goes peak A at 101.47. 101.47, and then it makes a B underneath that previous high, 107.49. The previous high was 107.80. Then it pulls back, and the lag in the ChapmanWave, this overlapping wave methodology, when you have an overlapping wave, it's like too powerful. It's like a V8 engine. You got the one side of the cylinders and the other side of this. As it overtakes the previous high with the same letter name, leg C, that is very powerful, and invariably it will go to a leg D. So let's do that. That's finished the monthly. The weekly, I had the daily. Oh, the daily is not. Now, the daily has started a brand new move. It's gone A, B/F, and then it goes, I'm calling it C/G because it's just been so strong. This is going to be very interesting. Very interesting always means it could do this or it could do that. But let's do the daily. Let's continue with the daily. A, B, C, D. Then you get your F, E. Doesn't go to F. So that's a failure. Okay. Now I can do it. This is MUB. This is the iShares S&P National Municipal Bond Fund. It has gone to a doji high of 113.99. It's made the pattern, that dreaded H pattern, and it's come all the way down. And you can get a measured move in this from the cup and the lip down to another one. If that's the case, if it doesn't hold key support, which is at 110.31 right now, it's at 109.99. If it cannot close back into the 110.70 to 110.90 area in the next 2-3 days, and the MACD and stochastic says that's going to be real tough, even the kickoff to the bear phase, for it to use price and time it's like the gaps to the upside when we've gone to the explosive beginnings of these moves, these big, powerful moves. So I would expect that we would have oil suddenly spike about $3, $4, $5 higher, or maybe $3, $4 higher. And the market just takes it on the chin, and we see a triple-digit down day. And it has to be followed not by an up 50 day. It has to be followed by another triple-digit down day. That will say clearly to me that you've got velocity of a reversal trend in place. To me, that's the way I'm looking at it. Or you could get lower lows and lower highs and lower lows and lower highs. But that, to me, is more of a major bear market. Right now, in a bull phase, and I consider this a bull phase, we've had 100% gain from the March 2009 lows. In the Dow, that is, you got much more in the Qs and others. I would have to say that the opportunity to fail has been there, and it was there almost all of last week. If we are just looking at fund managers coming in and buying, that might be the case, but I'm looking at the stochastic at 88% and rising and being very strong. I'm looking at just the possibility that the MACD fast-moving average could close above the slow-moving average. The weekly charts and the Dow are just fabulous. Look at the Qs. The Qs have made a new recovery high. This I have to still call leg F, but I can tell you right now, so far, there's nothing of the characteristic of an F, or it's a parallel wave count going to a new D. Actually, I could make a whole... It rarely happens. It's unusual for me to see this kind of pattern. And to say that based on this pattern, we will have more than just a sudden move to the downside that takes maybe 7 to 11 or 13 sessions of consolidation before we come back to the highs. So it's not impossible. I'm just saying that the way that the market is using every excuse, every negative excuse so far to still move higher, the way that the monthly chart is in, look at this. If you're looking at Tiger TV, just have a look at this chart. You tell me, is this not something to behold? That is the Qs. Now I'm going to squeeze the chart so that you can see going back to the all-time high. All-time high at 120.50. Yeah, this is the best rally that we've had since the lows of October of 2002.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, everyone. Basil Chapman now. I always get a little nervous when I don't get any calls like this. It always seems to me like, are people on the wrong side of the market? They don't want to call in. Am I on the wrong side of the market? What the heck's going on? Anyway, I have to just look at our portfolio in my opening call, and everything seems to be doing real well. Short is working, longs are working, so I don't know. I don't know what to say. So let's go to the XLF chart, which is the S&P Select Financial Spider Fund. You remember I did the naked chart the other day when I was explaining the ChapmanWave, how you can use it? Look, it went from the 4th of October, the low of 10.95, 4 peaks high on the 27th of October to 14.17. Pulled back on 23rd of November to 11.73. Ran up in a very quick short, moved to a peak D at 13.38 on the 7th of December. Whoop, down to 12.21 on the 19th of December. And then it went to a doji peak D high on the 12th of January at 14. On the 13th, it pulled back for 1 day and started a brand new buy mode. Then it went to another peak D. That's 1, 2, 3, 4 in this one chart. But something different happened. That's what you've got to expect. That's what I'll be explaining. Suddenly it goes to E and F. ChapmanWave song says, remember, suddenly goes to E and F. A bell rings so loud it can make you deaf. So what you going to do, which way to go? You sell at the high and you buy at the low. Except what I had also mentioned was this expanding triangle plus an oval formation. And that oval formation, just as I was explaining a few minutes ago in whatever chart it was, I can't remember anymore, says that if you were to break 1 penny above 14.87, that's the ChapmanWave stalk leg and body formation goes to the neck. Then you get the head, and you can come right back, but it's bullish short term. So we've got to watch the XLF holding so nicely. That's really important. Vivus, I was asked about in the den. Let's go there, and I'm looking around. No one. My engineers be wondering if. He's got nothing to do there. Good grief. Vivus spikes up, gets approval. In fact, it started off as one kind of a drug, prostate cancer, I think, years ago. Oh, we spoke about this as well. I remember this very well because one of the people in my Master Trader series knew the company very, very well. So Vivus Biotech suddenly gets approval for something completely different, and whoops, it goes from a low of around about 10.55 on the 22nd, powers to today's high of 22.93. This is leg E. It's really hard to tell when it spikes like this. I'm calling it leg E in the daily, but I should really call it E/A. I'm calling it E just to be conservative. There's nothing wrong technically, so I don't have to make any decisions whether it's a negative E or a very positive A. Let's go to the weekly. The weekly says that spike could in fact be a G or a brand new C. Whenever I see a spike like this, I need to know what happens over the next 2 to 3 bars. You remember Apple? So anyway, first of all, it's leg D in the monthly. Now, if you're in the stock, I'm going to advise you to raise your stop on at least 1/3 of the position. I want you to keep the call because this is a company that has something that's really quite exciting. But what I want you to do is it's a 24.83 was the high. Raise the stop on at least some part of it, maybe in the gap there, and make it a trading stop. Make it even tight, 50 cents or something. If it goes higher, you're going to take some off to reward yourself for being patient. That's number one. Number two is what you want to do is if it comes back and it really holds between 21.05, you remember Apple was like this. Where's the chart? Let me quickly go before we go to a break. Before we end the show. Remember Apple. So let me explain. It can go up and then it can have a pullback to about the 20.80 to the 21.30 level, or maybe even just 22.30. And then if it starts an inside buy mode, you can use that for another leg D. Apple did that. Let me just, as I'm wrapping up today, stay tuned for Larry Percevento. Should be a fabulous show as always with Larry, educational and really just tremendous information. Yeah, look, Apple's made a peak F, but now it's recycled, and that's what can happen. So thank you for being here. Don't forget my opening call. Don't forget my webinar, free webinar, Wednesday the 29th, 6:30 p.m. Go to the front page, sign up.